Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at RCAT Holdings.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps the algorithm find other investors like you.
Okay, I have to be honest. When I opened the research for today's deep dive, I actually I refreshed the page. I thought there was a typo, a decimal error in the spreadsheet or something. We talk about 20–30% growth and get excited, but looking at the numbers for RCAT, this is a different animal entirely.
It certainly wakes you up, doesn't it? You just don't see four-digit growth percentages, not unless it's some, crypto token or a penny stock that just got lucky.
Right, but this is a defense contractor, so let's not bury the lead. We're looking at RCAT Holdings, and the number that made me spill my coffee was their preliminary revenue guidance for Q4 2025. Can you break that down for us? Sure. So RCAT put out this guidance, and it basically set the market on fire. They're expecting revenue for the fourth quarter to land somewhere between $24 million and $26.5 million.
Okay, $26 million. In the grand scheme of the S&P 500, that's, a rounding error, but context is everything here. What were they doing a year ago?
And that's exactly where that typo feeling comes from. In Q4 of 2024, their revenue was just $1.3 million.
1.3. So they went from, a lemonade stand to a beverage corporation in a year?
That's a good way to put it, yeah. If they hit the top end of that guidance, we are looking at an approximate 1,842% increase year over year.
1,842%. That is just astronomical. And for the full year, fiscal 25, they're guiding for about 40 million total?
A 153% increase over 2024, to be precise.
Yeah. So the skeptic in me immediately starts asking questions. Is this just hype? Is it some kind of accounting magic? Or did they actually, sell something? Because you can get growth by acquiring another company or moving numbers around. What is driving this?
That is the multi-million-dollar question. And analysts are calling this the inflection point. To answer your question.
Yes.
No, it's not smoke and mirrors. This is the moment where RCAT transitioned from being, a development stage company.
A science project.
Exactly. A science project burning cash. And now they're a volume producer of defense systems.
So they're not just drawing blueprints anymore, they're shipping boxes.
They're shipping boxes, and more importantly, the U.S. Army is opening those boxes. This revenue is from active orders converting to cash. The main driver is the Army scaling up production for one specific drone, the Black Widow.
The Black Widow. Okay, let's unpack that. What is it practically? Are we talking about a massive Predator drone that fires missiles?
No, think smaller, much smaller. The Black Widow is a short-range reconnaissance drone. Think of it as the eyes and ears for a single squad of soldiers.
So it lets them see over a hill or around a corner?
Exactly. Without exposing themselves to fire. It's tactical. It's small. And getting the Army to sign off on mass production, that is a huge hurdle to clear. It means RCAT has moved past the testing phase.
Where the military buys, 10 of them to play with in the desert?
Right. They're now in the program of record phase, which is when the Army says, okay, we need thousands of these for actual deployment.
And that explains the hockey stick revenue chart. But here's my question. Why RCAT? There are so many drone companies out there. Why is this relatively small company winning these huge contracts right now? Is their tech just that much better?
The tech is good. It is. But if we're being completely honest, they're not just winning because of what they are. They're winning because of who they aren't.
Who they aren't.
They aren't Chinese.
The regulatory moat. We talk about moats all the time. A brand, a patent. You're saying their moat is the U.S. government itself.
Precisely. And it's a moat that's about 10 miles wide right now. You have the FCC and the NDAA, the Big Defense Authorization Act, and they are cracking down incredibly hard on foreign-made drones.
So companies like DJI and Autel, the ones you see everywhere.
Correct. For years, DJI dominated because they were cheap and they worked. But with the enforcement of Section 1709 and the covered list, if you're the U.S. Army, you literally cannot buy a Chinese drone anymore. It's illegal. You have to buy American.
So the government just cleared the entire playing field for them. It's like banning all foreign cars and then being surprised when Ford and GM sales go up.
That's a great analogy, but it actually goes a step further. It's not just buy American, it's buy verified American. RCAT is on what's called the blue list or blue UAS.
Blue UAS. I've seen that term. What does it actually mean for an investor?
It's way more than a sticker on the box. It is the Pentagon's official, vetted list of secure, cyber-hardened, U.S.-made drones. And getting on this list is not easy. It takes years of audits, supply chain tracing, all to prove that no data is being sent back to a foreign server.
So it's a very short list.
Very short. And if you're on it, you're essentially in a near duopoly for government contracts.
That creates incredibly high switching costs, right?
Massive. Think about it. Once the Army trains thousands of soldiers on a blue list drone and integrates it into their systems, they aren't going to switch to some non-vetted competitor just to save a few bucks. It locks in that revenue stream.
And RCAT was also selected for the DoD's Drone Dominance Program.
That's right. It's a $1 billion contracting framework.
A billion with a B.
Yes. Now, I want to be clear for you listening. That doesn't mean RCAT gets a $1 billion check tomorrow. It's an IDIQ contract. Indefinite delivery, indefinite quantity.
Okay, translate that from government speak for us.
It's like a hunting license. It means they're pre-qualified to bid on jobs within that huge pot of money.
Right.
They still have to win the work, but they're one of the very few people allowed in the woods to hunt.
Got it. So they have the Black Widow for the Army. Is that their only trick? I mean, what happens if the Army cancels that program?
That's a valid risk, and that's why they're building a family of systems. So the Black Widow is the recon workhorse. Then they have the Teal 2, which has night and thermal vision. And now they're expanding into the maritime space with Blue Ops.
Maritime. So drones for the sea.
Unmanned surface vessels,
Yeah.
Think little drones that skim across the water.
That seems like a pretty big shift. From air to sea?
It is, but it's strategic. Think about where the U.S. military is focused right now. The Pacific. If you're looking at conflicts in that theater, it's all islands and ocean. So having small, expendable drones patrolling the water is a huge priority. It expands their total addressable market. Big time.
Fascinating. So let's shift to the stock itself. How is the market reacting to all this?
The market is definitely waking up. The stock's been trading around $14.50 a share. Just on the back of that revenue news, we saw a pop of about 10%.
And looking at the chart for early 26, it looks like it's really ripped higher, erasing a lot of last year's slump.
It has. And Wall Street is noticing. Needham & Company just raised their price target to $16 with a buy rating. The consensus across the board is a strong buy, with targets ranging from $12.50 up to $22 plus.
22 from 14, that's some serious upside.
Up to 80%, depending on the model you look at, yeah.
But is this just, retail traders getting excited on message boards, or is there real institutional money behind this move?
That's the important distinction. And no, it's not just retail. We're seeing significant institutional flows. The Vanguard Group, for example, upped its position by about 43% in the last quarter.
Vanguard, okay, they're not day traders. They buy and hold.
Exactly. That validates the long-term thesis. But we're also seeing the speculative side. We've seen really high call option volume, nearly 37,000 contracts in a single day recently.
For listeners who don't trade options, what does that tell us?
A call option is basically a leveraged bet that the stock is going to go up. When you see that kind of volume, it suggests smart money is betting on a breakout. They're positioning for a fast upward move.
Speaking of fast moves, I have to ask about the rumor mill. I saw some chatter online linking RCAT to Venezuela.
Right, the rumor check. So there has been some buzz linking their drones to potential military monitoring related to Venezuela. I want to be very, very clear here.
Okay.
This is unconfirmed. It is pure speculation. Do not trade on that headline.
Got it. Don't bet the farm on a rumor.
Exactly.
Great.
But it does highlight that this stock is highly sensitive to geopolitical tension.
It's a high beta stock.
It is, meaning it moves more than the market. If there's trouble anywhere in the world where the U.S. might need surveillance, stocks like RCAT tend to react.
Yeah.
It's almost a levered play on global instability.
Okay, I'm going to play the skeptic now. Growth is great. Government contracts are great. But are they actually making any money? Like profit?
And that is the cold shower reality check. The answer is no, not yet.
Had a feeling. With that kind of growth, the bottom line is usually pretty messy.
Messy is one word for it. In the first 9 months of fiscal 25, they had a net loss of around $52 million. Some sources put the trailing 12-month loss closer to $90 million.
Ouch. $90 million in the red. That's a lot of cash to burn.
It is. But we have to look at why they're losing it. It's not because no one wants the product. It's because they are reinvesting every single penny and then some into scaling up.
So building factories, buying parts, hiring people.
Exactly. Hardware is capital intensive. Their operating margins are deeply negative. They're spending a lot of money now to make a lot of money later.
When is later? When do analysts expect them to actually turn a profit?
The consensus seems to be not before 2028.
2028. So investors need some serious patience.
They do. Now, if they scale faster, maybe that timeline moves up. But right now, you are buying a growth story, not a value story.
Okay, but if they're burning that much cash, are they going to go bankrupt before they get there?
That's the key risk. But looking at their balance sheet, they have a strong cash pile, around $212 million. So immediate bankruptcy isn't the primary risk. They have a cushion.
That's a healthy cushion, but where did that cash come from?
And that brings us to the other risk, dilution. They raised that cash, mostly by issuing more shares.
The pizza analogy.
The pizza analogy.
All right.
If the company's a pizza, and they keep cutting it into smaller and smaller slices to sell to new investors for cash, your slice gets smaller, you own less of the company.
So the risk is they burn through that $200 million and have to come back to the market for more, diluting you again.
Correct. And then there's execution risk. It's one thing to build 10 perfect drones by hand in a lab. It's another thing to build thousands on an assembly line with military-grade quality. If there's any delay, any defect,
The contract gets halted.
and the stock price gets hit. Hard.
So it's a high-wire act. They have a net, which is the cash pile, but they have to walk it perfectly.
That's a very fair assessment.
All right, so for the investor listening who's intrigued but, cautious, what are the key dates we should circle on the calendar?
There are three main catalysts coming up. First, the earnings date. It's expected around February 13th, 2026.
Okay, just around the corner. What are we watching for?
We want to see them confirm that revenue guidance, obviously. But I'm watching the cash burn rate. Are they spending faster or slower than expected? That's the key metric.
Got it. February 13th, watch the burn. What's next?
February 27th, this is a big one. It's their Innovation Day in West Palm Beach.
An innovation day, so like an Apple keynote, but for drones.
Chuckles. Similar vibe, yeah. They're expected to do live demos of the Blue Ops maritime drones. This is critical. It's the next leg of their growth story.
It's a show me moment if the drone works perfectly.
And the market sees that their addressable market just got bigger, and the stock likely moves up. It validates that whole Pacific strategy.
And the third thing.
The macro triggers. The ongoing debates around the FY 2027 defense budget and any further FCC crackdowns on Chinese tech. Any news that tightens the screws on DJI is good news for RCAT.
So putting it all together, what's the final verdict? How do you score this?
If I had to give it a bullish score, I'd put it high. Somewhere between a 7.5 and a 9 out of 10.
That's pretty confident given the lack of profit.
It is, but you have to look at the trajectory. The bottom line is this. RCAT is a high beta, high growth defense play. They've moved from concept to contract. That's the hardest part. And the regulatory wind is at their back.
So who is this for? Not the retiree looking to protect their nest egg, I assume.
Absolutely not. This is for the investor who can stomach volatility. It's suitable for a multi-year hold, if you believe in the domestic drone thesis. Or it could be a swing trade into that innovation day. But it is not for the faint of heart.
Sounds like a wild ride, but one with a clear destination, if they stay on the track.
That's the best way to sum it up.
This whole conversation makes me think we used to measure military strength by counting tanks and aircraft carriers. Now we're counting swarms of small, expendable drones. It makes you wonder if our investment portfolios are still stuck in the 20th century. Just something to chew on.
It's a brave new world out there.
Well, thanks for breaking this all down. And to our listeners, thanks for tuning in to Smart Wealth with Joshua. We'll see you on the next deep dive.
Thanks for listening.